Welcome back. Well, Hindalco reported a good set of Q3 earnings with a solid performance from the India business. Nigel caught up with Satish Pai, the MD at Hindalco, to discuss the company's Q3 performance and began by asking him about the aluminum EBITDA performance and the outlook for both the aluminum and the copper business going forward. Listen in to what they had to say.
On the aluminium side, $880, I think Q4 will be in the similar range because unless the LME moves upward, I think the EBITDA per ton on the aluminium business will be in that $800 to $900, which is, by the way, a fairly good level for us. The copper performance, I think, can be sustained. In fact, I do think that Q4 should be probably a little bit better than Q3, if anything. So I think the 600 plus crores on the copper side can be sustained.
Lovely. All right. What about the Novelis business? You've done close to $500 per ton, but obviously you had some kind of production issues which will get cleared out. And going ahead, operational efficiencies will pick in as well. So what's the guidance on that number for Q4 as well as for FY25?
So what we have said is starting from Q4, we'll get back to that sustained $525 per ton EBITDA and roughly 500 million of absolute EBITDA per quarter. So I think for Novelis, going forward, you're going to see in Q4 us hitting that $525 per ton and into next year steadily probably going up from that number.
Let's talk about the big point, though, that came in with regard to this capex of the 600,000 ton moving up. Now, you'll have revised it to around $4.1 billion. Is there an upside risk even to this number or everything has been correctly budgeted now?
Yeah, I think it'd be fair to say that a huge amount of work and cross-checking had gone in. So I think the upside risk to the 4.1 billion is negligible in my opinion.
Okay, all right. Now the IRR, because of the way the capex has gone up, the IRR is likely to get diluted to low teens in comparison to high teens earlier. This is what a couple of brokerages have raised as well. What is your comment on it?
No, that's what we actually guided from the mid-teens to double digits. So what you have to remember is that this is a dollar-based company. The cost of capital of Novelis is about 8.5% to 9%. And we are getting a project that's going to give us double-digit returns. So it is financially still very viable. The second point I wanted to make is that this is a greenfield strategic project where we set the base for further expansions. So we are getting 600 KT at this 4.1 billion, but the next 600 KT, the capex will be from about $1,500 to $2,500 a ton. So for much less capex, we can double the capacity going forward. So I think for Novelis, that's the world leader in aluminium rolling. This is a great strategic project. It is financially viable in phase one, and the returns will only improve when we do phase two.
Got it. Given the kind of stock price reaction, would you consider scrapping this project at all?
Absolutely not. I think that for the long-term strategic reasons that I just mentioned, North American market is undersupplied for FRP, both in can and auto. Can is being imported in from China and the Far East today. So I think that positioning our customers really pushed us to do this project. So I think that, we are absolutely committed to going forward because we are the world leaders and the largest company by far in rolled products. And we think that it's in our strategic interest to do this project.
Okay. And you're also saying that the EBITDA per ton will be much better in the times to come from this $500, $525 per ton. Give me a couple of numbers then. Say by FY26, what should the EBITDA per ton look like? And what's going to be so different that you see this EBITDA per ton scaling? If I'm not mistaken, you're talking about $600 per ton.
Yes, so we have already communicated in the Novelis analyst call the $600 per ton in a couple of years. So I don't think I can give you year by year, but it's fair to say that from 525 in a couple of years, because the pricing levels for can with all our contracts is going up. So even before Bay Minette comes, I think we will hit the $600 per ton. And after Bay Minette, I think there is further upside because Bay Minette, the costs are much lower. It's a highly efficient plant. And hence the margins will improve further when Bay Minette is fully commissioned.
So for Bay Minette, do you want to give us an EBITDA per ton guidance? As of what things stand as of now, it's going to be substantially better. But how much better can it look?
No, I don't think I can give you an absolute number, but most of the people, when you take 4.1 and a double digit, have backward calculated what that number will be.
Got it. All right. That's going to be much higher than that $600 per ton, going by, rough math that I'm doing right now. Let's talk about funding, though, of this big capex plan that you'll talk about and the other capex plans as well that you'll have already announced. Can you tell us what would funding look like? Give us a capex breakdown. FY25, what will the capex be? FY26, FY27, if you could break it down for us.
So I think your question now is for Novelis, so I'll answer that.
Yes, for Novelis.
We don't have a problem with the cash. I think for Novelis, this year the capex is going to be about 1.4 billion. I expect over the next 2 years, it will be about 1.5 billion per year going forward. I think that depending on, because the Novelis cash flows by quarter tend to vary, so we may have to do a little bit of bridge funding to meet the cash requirements over the next 2 years. But their capex should be about 1.5 to 1.6 billion for the every year for the next couple of years.
Okay, your debt levels, every time we talk, Mr. Pai, I ask you, your net debt level has come down now to sub 35,000 crores. So you'll have prepaid some debt, which is looking good. What would the peak net debt number be in absolute terms?
So look, the peak number again is for Novelis. So I think Novelis over the next couple of years could hit about 3. They are currently below, they'll finish the year below 2.5. But because of this large capex, their net debt to EBITDA could come around 3. Whereas the India net debt right now is negative. So I think on a consolidated basis, we are fine. On an absolute basis for Novelis, for a downstream company like theirs at 3, they are also okay.
All right, 3 net debt to EBITDA, right? That's the peak level.
Yes.
Okay, also the other new player that's coming in the market is Adani. They're going to be opening a copper unit, in the years to come. Will this impact your concentrate supply in terms of inflated pricing, or do you see no problem?
No, it's not that it'll impact. I think that, the concentrate supply anyway in most of the world is quite tight. So if you see TCRCs for calendar year 24, they came in at about 20.5 cents per pound, which was 9% lower than last year. And that's because, the Panama copper mine shut down. Anglo gave a warning on how much concentrate is available in their Peru mine. So you have a situation where the copper demand is going up and the copper mines and copper concentrate supply is going low. So I think that is going to put pressure on TCRC margins. I think one additional smelter will not just move the world prices.
Okay, all right. So you're fairly comfortable then on that front. Well, it's good speaking to you, Mr. Pai, but we can't end the interview without asking you about Hindustan Copper. From the time we have been speaking, the stock price has moved from around 100, 110 rupees, I think, in one of the interviews that I asked you. And currently, it's gone out of whack. It's over 250 rupees. Would you all still be interested in Hindustan Copper if it comes up for divestment?
I think that, we have expressed and filed the papers to be the operator of the Rakha mines. Actually, Hindustan Copper is going to be going to do an auction for an MDO type of contract on the Rakha mines in Jharkhand. So all I can tell you is that we are very interested and will be participating in that.
You're going to participate in the Rakha mines, but what about the company at large? If it's available for sale, are you all interested? Only I ask you this again, you have told me in the past that you will be inclined to it, but at these sort of valuations?
I think that anytime it will come on the market, then based on what we see, we will make a valuation whether it makes sense for us. We can be very interested in the mines that Hindustan Copper has.
All right. Well, Mr. Pai, taking it as it was given and in fact clarifying on various issues, they're interested in going ahead with this project. On the Indian profitability, sounding very optimistic. EBITDA per ton for the aluminium business at more than $850, and the copper business can continue to do 600 crores per quarter.